Trouble is brewing in India, once hailed as the world's growth engine. The economy is starting to sputter, and even the growth that has come has benefited only a select few, leaving millions on the sidelines. But this week, the warning signs became impossible to ignore. The Indian rupee crashed past 90 rupees to the US dollar, a level no one expected to see so soon. A historic low, a psychological break, and a warning sign that the economy is under real pressure. The fall has been fast. This year alone, the rupee has slipped more than 5%, making it one of Asia's worst performers. And the pain doesn't end there. Foreign investors have pulled out nearly $17 billion from Indian markets in 2025. Money that once fueled growth is now fleeing to safer shores. And stock markets, which touched records high in 2024, have lost their shine. 2025 has delivered barely 5% returns, putting India among the weakest major markets of the year, many reports even suggesting Indian markets are worst performers. So what's going wrong? Trade tensions, US tariffs on Indian goods hit exports, trade deal delays created uncertainty, foreign investors exiting Indian markets, and ballooning trade deficits. India's trade deficit hit an all-time high in October, reaching $41.68 billion. Imports, oil, metals, electronics kept rising, demanding more dollars, and exports falling. But the real story lies on the ground, Indian homes. A weaker rupee means everything imported becomes costlier. Fuel, cooking gas, mobiles, laptop, appliances, even groceries linked to global commodities. Students studying abroad are feeling the squeeze the hardest. Tuition, rent, food, travel, every bill balloons when the rupee shrinks. Families are paying lakhs more for the same year of education. Businesses depending on imported parts are bleeding too. Electronic makers, auto companies, retailers all face rising costs. Some will absorb it, most will pass it on to the consumers. There are few winners. Exporters get more rupees for every dollar earned. Families receiving remittances from abroad see bigger conversions. But for the average citizen, the equation is simple. A weak rupee means a more expensive life. India now stands at a crossroads. A falling currency, a nervous stock market, inflation risks rising, and households carrying the burden. The question isn't just why did the rupee fall? The real question is how long before this starts slowing India's growth story?